I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, hope you're all doing well. It's Lane here with {MetaShackle}, and I hope everybody has had an incredible holiday weekend. It really was good to get out and see some old friends and spend some time with some family and get away from making content for a while, which sounds simple but actually takes quite a bit of time, especially when you're editing. So I just wanted to go over some things here really quickly in regards to XRP and liquidity. So let's not waste any more time and let's get into the video. Now this chart might be kind of hard for some of you to see as it's on the daily chart, but it gives us vital information that the weekly chart does not give us. So we're just going to have to suffer through it. Right here is where XRP first started trading, way back in August of 2013. It first took a dip, came up here, setting this high, which at the time was around 6 cents. When the pullback came, you can see here that this low right here swept this low, taking all of the sell side liquidity. As price came back up, it teetered here, leaving these 2 points loaded with buy side liquidity, essentially leaving them to be rated at a later date. Price then came down here, setting this low here, which swept all of the sell side liquidity on the pattern here, but leaving this. Price then traded sideways in a nice wave of accumulation, but notice this candle right here. This liquidity candle came down, sweeping all of the liquidity of this entire pattern, with the exception of this little bit right here, which it left behind. So with this low sweeping this low, wiping all this liquidity out, then this low coming in, taking out all of the liquidity except for just a little tiny bit, which was basically the institutions and hedge funds, the smart money, and leaving a bunch of buy-side liquidity up here. Price then broke out of the pattern going up, sweeping all that buy-side liquidity. In doing so, it left sell-side liquidity all the way up here. As you can see, right here, as it moved sideways forming this pennant, or bull flag depending on how you look at it, price never came back down to absorb the sell-side liquidity from here or down here. Price then came up to this point, setting the all-time high around January of 2018. As price came back down, it eventually came down and swept with this candle here in March of 2020, all of the sell-side liquidity for the entire pattern, leaving only what you can see here in the red, which it never came back for to this very day, which essentially left sell-side liquidity here and here. Price came back up, setting this high right here in about April of 2021. As price came back down, falling to the lower areas, this was the lowest point that it got to. So it left all of this sell-side liquidity right here on this chart where it remains today. This nice area of accumulation came. Price dropped down just a little bit right here before breaking out to where we are currently trading. So all in all, on this chart, all you see as far as sell-side liquidity is concerned is where the red marks are. Here, 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 and here. This area, and moving up into this breakout leg that we're currently in. Now, as we've moved up and farther away from these areas of sell-side liquidity that were left, they basically become obsolete because these areas consist of buy orders, they consist of liquidation points for leverage traders, they consist of sell orders, they consist of stop losses. And as price moves up and out of these areas, this liquidity eventually evaporates moving with it because people close their positions. Therefore, those stop losses no longer exist because they sold. The liquidation points no longer exist because the funding rates of trading high leverage positions is very expensive. So eventually you want to close them out before it nibbles too much of your profit away. So essentially there's no point to coming down to these lower levels anymore because the vast majority of this liquidity is gone, as well as in this area here, as most of these positions have been closed out. The most pertinent area of liquidity remaining on the charts right now is this liquidity here and the liquidity that we have right here and here. For additional information and exclusive perks, do consider joining me and the rest of our community on Patreon. Now, looking back on this chart, every single bit of buy-side liquidity has been completely mopped up on the entire chart since XRP has been traded, with the exception of this here, and right here where we're currently trading. The sell-side liquidity right here is the most pertinent because many of the people that bought in this area are still holding to this very day. Lots of people have taken profits, and there are other people who have set very low limit orders down in these areas in the hopes price would come down, trigger that order, so that they could catch the ride up. Most of the leveraged positions from this area have been closed out just because of the funding rates chipping at their profits. So most of the liquidity that rests down in this area here is due solely to spot traders. But most of this liquidity has likely evaporated or moved upward because most traders, say you bought right here and they set a stop loss down here, once price moved up, traders will move their stop losses up with them to secure profits. In the event that it does come down, they won't lose all the profits, they'll just lose a little bit. So most traders who have been coming up on this massive ride we have been on for these last 6 or 7 months have dragged their stop losses up with them, basically making the vast majority of any liquidity that remains here null and void. And when you look to where we're currently trading right now, price came up here, came down. We set the all-time high right here. This liquidation candle wiped out all the sell-side liquidity for the entire pattern. Took out the buy-side liquidity with this move up. We came up here on the Trump tweet pump, which left a little bit more buy-side liquidity to be rated at a later date. We then came down with this liquidation candle, which swept the liquidity of the entire pattern, leaving sparse liquidity here, and we have been building sell-side liquidity up here ever since. So this is the only area of sell-side liquidity on the entire chart, with the exception of a little bit right in this area. And if you look at the chart right here, you can see there's a weak doji, reverse waterfall, sitting right here at $1.47. You can also see that we have one right here, about midway through this liquidity zone, which rests right here that I've been talking about, sitting about $1.92.5, which is my target. This line right here represents the reverse dragon pattern that I've also been talking about for about the last month, with its tail here, with its back legs here, the hump, its front legs, moving up here into its head, where we are now trading. Now, if we look at the chart that I posted regarding the reverse dragon pattern, you can see that it's very likely that we are trading in this area right here, right now. On my chart, I posted the flash crash marker here. Price was trading down here. I said it was very likely that we would move up here somewhere in the area between the equilibrium line and the flash crash marker, which is exactly what happened. And keep in mind, this chart is a little bit out of date, but we are trading in this general area. So when we look down to the pattern, you can see here in that same point where the flash crash marker is here, trading up into the dragon's head area, what happens? We see a flash crash coming down to absorb sell-side liquidity before the move up. And on this chart, the weak doji is marked right here, which is subsequently the exact point that the liquidation candle came to. If you look where we are right now in that reverse dragon pattern, taking into account all the buy-side liquidity that they are stacking to raid at a later date because it will give them momentum moving up, if the algorithm decides to go after liquidity, or institutions or hedge funds decide that they need to fill big orders, the only place that they are going to get the liquidity that they need in order to fill those is right here. And buying here is a much bigger discount than buying right here. Hedge funds and institutions don't pay retail prices. They get discount prices. We are retail. We're the ones that pay the retail price. And if this liquidity right here does not suffice, it is very possible that it could come and lap up this last little bit down here as well. And I know that it's hard to believe that price could come down to this $1.47 level, taking out this weak doji reverse waterfall on the daily, but it is possible. I'm not saying it's going to happen, but it is possible. Price also could just come down into this liquidity zone right here, taking out this weak doji and mopping up a big portion of this and perhaps leaving a little bit here behind as it did back in the lower pattern. But it's not out of the realm of possibility for this sell side liquidity to be mopped up in an instant like we saw right here. As many of you know, I have been expecting a flash crash / liquidity grab for quite some time. Originally, I hypothesized it would happen in mid to late April, perhaps early May, which it clearly did not happen. But regardless of me being wrong about the time frame, this liquidity still remains and has actually been increasing, which in my mind makes it far more likely that they are going to come after this at some point, perhaps even deeper. It would not surprise me one bit if we see this weak doji taken out as well, even though I'm personally shooting for this one here. That's just something to consider, something to think about, especially if you're laddering buy orders down here in the hopes that something like that happens so that you can get your order filled and ride it up on this next leg, which we all know is coming. But it's never easy, and they are certainly going to take out as many people as they can right before it happens. And just as any trader knows, this happens more than you would ever imagine. This happens all the time. Price falls back down, barely touches your stop loss or your liquidation zone, knocking you completely out of the game. Then shortly after that, reverses, and then the run that you had been expecting since getting into that trade suddenly happens the second you get knocked out. And that's exactly what they're going to do to a lot of people. They're going to try and take out as many people as they can. Look how these patterns form coming up to these highs, having a tendency to retest these weak dojis at these breakout points. Time and time and time again we see it happen. Do you think they're going to make it this easy for us? And it hasn't even retested off this trend line, which is very common. And if you want to look at the overall pattern, this is the upper trend line, which took 7 years to form, and we have not even touched this yet and retested off of it. That's another thing to consider. I'm not saying that's going to happen. Actually, I think it's very unlikely at this point. But when you look where all the available liquidity is, on the buy side, here and right here, they always raid this later on their next leg up. That's why they leave it here. But this sell side liquidity has to be mopped up previous to the breakout, because as that breakout occurs, it just takes the buy side liquidity by default. The sell side liquidity has to be taken ahead of time. And even though Bitcoin has been on an absolute tear, anybody can take a look at the XRP chart and see how much it is absolutely struggling to gain ground. Although this bullish order block has been severely weakened, it is still playing in this area right here, but has barely been able to make any ground. The only thing that would change my mind about XRP moving upwards with Bitcoin at this point would be getting above this upper trend line, getting through the equilibrium zone, then taking out this bearish fair value gap right here, which, as you can see, since forming has been acting as an incredible barrier, which was only breached to the 50% mark one time before it failed. This right here is our current roadblock, and we're not going anywhere until we take it out and get above it. So thank you so much for watching. I appreciate each and every single one of you. Please do me a favor and hit the like button. It helps the channel and it doesn't cost you anything, and I'd really appreciate it. So thank you so much. Have a great day.